Hey, what's going on, everybody? Welcome back to K.Ash Capital. In this video, we're going to go over a few bullish continuation setups. There are a lot of pattern traders out there, meaning when they see price action on any given time frame, they trade it a specific way. In these bullish continuation type setups, they are high probability. You just got to know how to trade them, when to trade them, and things of that nature. So I'm going to go over a brief description of what these setups look like, possibly how to trade them. And also, if you haven't seen any of these other three videos right here that just have popped up, they kind of all go together. So you watch, if you're brand new to trading, don't know what's going on, you could watch you start from video 1 about learning the price chart, to moving averages and volume, and then onto support and resistance. And all this ties together, and once you learn those with the candlesticks, then you move on to, okay, now I need a pattern to trade. So you know how to read the price action, you know the tools you need, now you need to know what you're looking for. And this little video will show the ideal type of setups you can trade. So let's get in. Alright, so there are two types of bullish continuation setups. There's basically a consolidation and a pullback type of bullish continuation setup. So the consolidation type of setups are a high base, ascending triangle, or a bull flag. Ascending triangle and bull flag are kind of the same, but I will go over the differences. And so basically what a consolidation is if you don't know, after the price of a stock makes an extreme move, it needs to take a break for a minute to kind of catch its breath. It's like we'll say a sprinter. It's doing the 100-meter dash, and then at the end of that run, it needs to catch its breath for a minute before the runner takes off running again. Now I'll show examples of that as well. And then also, since it is a bullish continuation, the consolidation, the price is getting tighter and tighter, waiting for energy to be built and released. And since it is bullish continuation, we're expecting energy to be released higher. Now a pullback is slightly different. A pullback is after a certain level is broke, it goes higher and then pulls back to that level, offering an entry, and then you could ride it for the next leg higher. Typically, the reason the pullback happens is because on entry, the bunch of traders get in, they're looking for that quick pop up, and it is pulling back as they took profits, and then now it's offering another chance for other traders to get in and ride it higher. Alright, so the very first one is a high base. So the part right here on the left where this little drawing is, so imagine that this is a candlestick pattern. Those are candlesticks forming this pattern, right? And for simplicity, we will pretend that this right here is, we'll say $50 level. That's a $50 price level. So the high base part of this whole pattern is this little section right here. That is the high base pattern. And then you can look at lots of charts and see where this has happened. And sorry, I lost my mouse for a second. Okay, so set. Whoops, let's go back. Sorry about that. So here's once again, the 50 price level. All right, and so right here, price is consolidating, and you can look at a bunch of charts and you'll notice this little blue line right there, that's we'll say a moving average of some sort. So before I continue on, so the trend analysis, you want to find a stock that is trending higher. Typically with the rising 50 SMA, the consolidation comes back to any type of SMA, an EMA, a lower trend line, anything that you use to determine consolidation to break. But you can see on a lot of charts where it's usually moving averages that push them above that level. The reason that is why moving averages is because when you're a big institution and you're buying stock, hedge funds and financial advisors and whatnot, they are graded based on how good of a price they got, their average price of the stock that they filled the position on. So you don't want to overpay. And so moving averages the average price of the stock. They need to pay for the average price, or they're going to get a bad fill, potentially lose their job, and so on and so forth. So they need to pay for what the going rate is and not overpay for it. So that is why moving averages work. So like right here in the little rules, it says right here on the right side, like I mentioned earlier, the SMA and the lower trend line consolidates, and then at the bottom of your charts, you'll see a little volume bars. During the consolidation, we see low volume, but on the break out right there, that's when we want to see volume get big. You want it above all these little bitty bars. You want it high volume, showing that there is basically, there's always a term used saying that there is fuel in the tank to push the price higher. So that is a high base. Now I can show you a real one. Okay, so this stock actually got in on Friday. So the pink is 8 EMA, the blue line is a 21 EMA, and the orange is 34. But you can see how it is a really high and tight base, real tight. And then on Friday's candle closed at the highs. So I'm looking for this to break, and the 8 EMA is just pushing it higher and higher for hopefully it hits that $50 mark. But this is an example of a high base. And it follows all the rules based on that right there. So when it does break down here, we want to see big volume bars. We want to see big green bars over here when it happens. Alright, so an ascending triangle or a bull flag, they're kind of the same. Like I said, I will cover the difference. So the trend analysis, once again, you want the stock to make a new swing high. So the swing high came up, and right here it is consolidating. Once again, the stock is coming back. In this case, is usually, it could be a moving average or lower trend line, either one really. But what you do notice is, if we use this as the $50 level again, price is making higher lows, meaning it's compressing. It's like a coil getting tighter and tighter and tighter. Yeah, let me change my ink color here. So it's getting tighter and tighter and tighter and tighter until eventually, boom, it breaks. And if you've been around for a while, I'm sure you've seen people draw a little ascending triangle, so it's flat. The meaning there's a seller right here. Every time it sells it lower. And then it's getting tighter, tighter, tighter till eventually this seller is gone. There's no more. That person sold all his shares, and now all the buyers could take it higher. That is the psychology behind how the ascending triangle works. So the only difference between the ascending triangle and the high base is a high base is that it has relatively high highs and lows. So like there, it's all the same. But right here, it's higher lows, but same highs. Now, for the bull flag, it's kind of the same. Except we'll say it goes up, and then it could chop down, and we'll say the trend lines, and then once it gets above that trend line right there, it goes higher. So that is how bull flag works, and it doesn't have to be this far angled down. It could be a little bit more sideways. It comes in different variations, but it's relatively the same idea. Alright, now I'll go over a live example. I was having a difficult time finding an ascending triangle to put in this, so I had to Google it. And this one's from Stock Charts, obviously from Walgreens back in the year 2000. And so you can see right here around this red line right there, around what we'll say 29.50-ish. You can tell there was a seller pushing it down, but it just kept on going higher and higher and higher till eventually it broke. And look right here, higher than above average volume. So there's fuel in the break to push it higher. So that is a continuation. Alright, bull pullback. This one works for two different types of traders, really. It depends how aggressive you want to be. So we'll say this gray line right here. Once again, we'll use 50 bucks. Hit it, and then so on the break out right there, you want to see above average volume. No, actually, let me re-say that. That is incorrect. The pullback is this part right here, where it came back. So you could actually see quite a few of these put together. So this lower portion right here could actually be an ascending triangle. It broke out, retested, and goes. So what do I mean by that? So if, say, you miss this breakout right there. You missed it because you didn't know about the stock. It doesn't matter. You just missed it. So pretend this lower portion is down here. So you missed it. So what you can do is keep an eye on it, wait for it to pull back and retest support, and then that's when you could enter and ride it higher. That is one way to do the bull pullback. So bull pullback, same rules as all these other ones. You want it trending higher. All of them are pretty much where the stock is trending higher, but there is a slight break or a pause in the incline or increase in price, and allows a chance for traders to enter, thus, and then you ride the next leg up. And so key things to look for on a bull pullback is you want lower or equal volume on a pullback, and then on the right here, in these little spots right here, you would want little volume bars, but then on this part you want big volume bars, showing that there is buyers coming in to push it higher. And then if you watch the candle little video I made, and I'll put the little link right there, that you would want a hammer candle in this area. So you'd want we'll say there's a square and you have a long wick, your hammer candle. When it breaks that high on the next candle, that's when you could enter, and then you can put your stop at that low. So that is one way you could trade a bull pullback. Now here's an example. I couldn't find any with the craziness of the market right now, but I pulled this from my trader view from back in April 27th this year of 2020. So an example. So here is support. Right here in this green triangle is where I bought some, I believe, 80 calls. And then these red arrows are where I scaled out. So an example, oops, that is not a straight line. Try it again, roughly straight line. So price broke out. I can't really see that green. All right, price broke out, came back. You see the hammer candle shows buyers came in off of this 80 support level, and then above average volume down there. I scaled out on the, like I said, that red triangle right there, and then scaled out near the top on the next break. That was I believe like 120% return, something like that. Anyways, the point is it went up, pulled back, entered, got out on the pop higher. And then once again, if you look right here, it retested it again, offering another chance to get in. So it broke. Like, I was one of those sellers. I was looking for it to sell on the spike. Sellers came in, put it right back down to support, came back in, and look, it continued higher again. So it tested this 80 level a lot. So those are examples of bullish continuation patterns. If you have any questions, feel free to ask. If you haven't done so yet, please subscribe. I like to see this channel grow a little bit. And I know some of my previous videos have been where I'm talking rather quickly, mainly because I understand already what I'm talking about, but I need to slow it down a little bit for people that don't understand. So I'm working on that. If there's anything you would like to see, please let me know. Like the video if you found it helpful. If not, give it a thumbs down. That even helps. And yeah, thank you very much. Have an awesome day.